In most states, transferring property from one person to another triggers a tax known as a transfer tax. This tax becomes payable when the deed is recorded, sometimes through the purchase of stamps, from the recorder of the county where the property is located. Transfer tax may be paid by the buyer, the seller, or split between them, according to their agreement. Some states charge nothing to transfer property, while in others, transfer tax rates vary by locality. Recording fees are charged by state and local government agencies to legally record deeds, mortgages, and documents related to home loans. These fees vary depending on the county and the complexity of the transaction. When you sell a capital asset, the difference between the amount for which you sell the asset and your adjusted basis, which is usually what you paid, for the asset plus or minus some items, is a capital gain or a capital loss. The basis in the home is determined by how the owner obtained the home. The basis is its cost when purchased or built, plus any improvements. Capital gains are divided between short-term capital gains, losses, and long-term capital gains or losses. The taxation of the gain is dependent on the length of the time the capital assets are held. If total capital losses exceed total capital gains, the excess is subtracted from other ordinary income on the income tax return, up to an annual limit. Any unused capital loss can be carried over to the next tax years, until the loss carryforward is completely used up. A Section 121 exclusion occurs if sellers qualify to exclude from their income all or part of any gain from the sale of their main home. If the taxpayer meets all the qualifications, the taxpayer can exclude up to $250,000 of the gain on the sale of their main home. A married couple that meets all the qualifications of Section 121 may deduct up to $500,000 of the capital gain. Depreciation is an income tax deduction that allows a taxpayer to recover the cost or other basis of certain property. It's an annual allowance for the wear and tear, deterioration, or obsolescence of the property. To qualify for a depreciation deduction for a piece of property,